Welcome to one of the last sessions of a global startup program of 2 days. Very honored that we are invited, UNDP invited to moderate this exciting session. My name is Ayako, Senior Expert of Sustainable Investments in Asia Pacific. In this session, we will cover a little bit of context that I will share with you, and then introduction of 2 industry giants, and then great respected practitioners around the world, of 2 colleagues, and then we're going to start the panel. So a little bit of context. The sustainable investment has been one of the interesting topics, and recently we have seen planetary global challenges. You might see climate change, threat to supply chain, as well as nature and then social human rights agenda. And we see some of losses economically and life. However, the positive news is that the business community in the world has started looking at it by preventing and safeguarding the risk, but also they see this is a huge area of businesses. The global sense, a lot of standards and then practices have started journey, mainly in Europe, and then EU taxonomy, and then there are some emerging supports. However, in Asia, where we are here, we actually see many interesting localization, application of those business activities together with quantified measurement and then tracking of such impacts, which we are pursuing 3 triple bottom lines, the industry calls, the values of environment, economy, as well as social agenda. Looking at Japan, we have been lucky, and the government is producing and then promoting different financial policies in developing more ways. The asset management, financial asset management, needs to be more efficient, and then also startup development. We have seen this interesting week. I'm gonna probably ask you, Ken, later, but we focus what would be the challenges and then key milestones that we should look at in scaling up innovation and then impact investing in Asia and Japan. Let me introduce 2 of colleagues. Ronald, we would like you to have a bit of introduction about what you do, and then in the last 1 year, what was the highlight you've seen, some positive developments in impact investing in the way that you frame today's topic? Would you like to start, Ronald?
Yes, wonderful. First of all, let me say what a great pleasure to join you. I wish I could be with you in person. I love Tokyo. I love sushi, which is the title of our panel or of this conference. My background was as a venture capitalist. I was lucky to be at the very beginning of the venture capital industry when I was 26 years old, to contribute to founding it. And then at the age of 60, I left Apex Partners, the firm I co-founded, which today manages $75 billion, to spend my time on social issues and the Israeli-Palestinian conflict. It's a longer story, but I do believe that the title of this session is actually very much the title of our future. So I look forward to participating with the other panelists.
Thank you very much. And now we have here Ken-san. Would you like to do your introduction and a bit of your inputs, how you see the last 1 year? Any highlights, any challenges?
Sure, thank you. Hello, everybody. My name is Ken Shibusawa. I have the honor of sharing the stage online with Sir Ronald Cohen, who I consider to be the father figure of impact investing globally, really thought leader. So I'm really honored to be here on the stage with him. And Ronald, you should be here because this is a rock and roll stage right now. So I really miss you having here. Yeah, my background, I'm also in the finance, but more in the financial markets. But I had my wake-up call around 2001 when the 9/11 happened, and when I felt that the profit sector and the non-profit sector were really divided, and then looking for ways to connect and to bridge the two sectors. I wear currently many hats. One is the GSG, we call the National Advisory Board. The GSG is a movement that Sir Ronald Cohen started a little bit over 10 years ago, and I have the privilege of being the Japan chair. I have my own company, Shibusan Company. I have a long-term investment mutual fund. We don't call it a sustainability fund, but a cross-generational investment for the next generation. So that obviously would include sustainable growth. Currently trying to launch an impact fund from Japan into Africa, which is quite a challenge. But this past year, you said, it's been in Japan, I felt that there's been lots of movement, and not in a straight trajectory, but really sort of spreading to different sectors, from startups to large corporations, to the way the government looks at development cooperation in the emerging markets. So it's been a quite exciting time to be in the impact space in Japan.
Wonderful. Thank you very much for sharing. Lastly, my introduction. I'm Ayako. I'm based in Singapore. Then I'm part of the team called Sustainable Finance Hub. The team does support, advise the private sectors, mostly financial institutions, so that they get knowledge and actual application of a framework such as impact measurement and management. And then UNDP has some kind of intellectual tools, UNDP SDG impact standards, and then happy that in Japan, Ken-san sits on the impact advisory board of this SDG impact standards, and then we have a colleague, Simi, who does training across Japan. And also we advise the impact fund. We don't become equity investor, but we convene aggregate stakeholders, and then again we provide IMM advisory and also support identifying investable such as startups, and then we have other program called Impact Venture Accelerator that we have reached out 600 startups globally, and then by 2028, we aim to reach out to 1,500 ventures. We have been working with Ronald because we have a MOU, UNDP and GSG, and then we have colleagues from GSG, part of this accredited trainer of these impact standards, but also, Ken-san, again, as I mentioned, he is a vocal advocate of UNDP SDG impact standards. So let's move to panel. Probably some of you in the audience might have been in the Japan Financial Service Agency's Impact Investment Forum earlier this week. This Ronald and then Ken-san had a very interesting discussion. It's more of high level and then bird view principles and then how industry should be moved. But today we want to focus a little more real sense, actual transaction examples as much as we can. The first question, Ronald, a bit kind of broader picture question. So you lead GSG, and then in the last 3 years, what was your GSG, or maybe you have a different responsibility, have seen the developments and then bottlenecks, challenges in terms of sustainable investment in relation to innovation globally and then Asia?
I think that the most fascinating thing for me is the parallel between this impact revolution and the previous tech revolution, in which I was also privileged to play a role. I see entrepreneurs everywhere now, including impact in their thinking. What might have been 10 years ago simply a software company managing public transport and looking at growth and profits, it's today a company that's measuring its carbon emissions, the waiting time of commuters, the hours worked by the driver, the accidents created. What might have been a school previously is today a global platform teaching people across the world coding, where they only pay for their education after they have got into a job. In the health area, we see new ventures that are dealing with telemedicine, diagnosis, using massive data to improve the outcome in very remote places. So what I found very exciting over the last 3 years is to see the change in values, which started with young people, many of them entrepreneurs, who didn't want to buy the products of companies doing harm or to invest in them, shifting to the financial market with 45 trillion of ESG and 2.5 trillion of impact investments coming together with new technologies, AI, machine learning, augmented reality, virtual reality, which enable us to deliver impact in ways humanity could never previously contemplate. And these two powerful forces are coming together with a third powerful force, which is referred to, which is the force of transparency. One of the most exciting things of the last year, which you asked me about, is the breakthroughs at the International Foundation for Valuing Impact, where both Ken and I are directors. A global organization bringing us impact accounting. Later this year, we will have a full slate of monetized environmental impacts that companies and investors and governments can use to measure the impacts of companies. Effectively, over the last 3 years, we've seen risk, return, and impact become a superior business model to achieve higher growth and higher profitability while tackling our environmental challenges and the big inequalities, social and economic inequalities in our society.
Brilliant. We have heard so many keywords that I intend to cover the rest of the panel. But Ronald, so you have mentioned that because of technology that enhanced accessibility and then connectivity, and then that benefit economic activity, including entrepreneurship. But also in terms of financial traditional type of accounting principle, there was a development in quantifying, for instance, nature value, environment, which was regarded as externality in the past. And that, of course, helped promotion of human rights and then, social value. Looking at Japan, a little more magnified, into this week. So Ken-san, you have, shared your view at FSA's Impact Investment Forum, and then there are a couple of, partner conferences by CIMI, Social Impact Day. I think, I imagine some of the audience might have attended yesterday and today, and a couple of, private company held impact-focused conferences. So how do you look back? Any new findings, or were they mostly what you already know and then you wanted more, or what was your impression?
Well, first of all, when the FSA established the Impact Consortium, which initially I thought, well, we already have the GSG, why do we need another consortium? But the way it turned out, it was a very, very good way to promote this concept of impact, because they're the government, and when the government calls out, guess what? A lot of people come. And so it's not just the investors, but it was the large corporations, the Keidanren, Keizai Doyukai, Shoko Kaigisho. It was also the regional, governments, and of course startups as well. So the outreach was very, very broad. And I mean, I'm not sure how impact ecosystem is developing in the other countries in detail. But I think one of the characteristics I see in the way the Japanese impact ecosystem is developing is that, well, the government is on board with this concept of impact. As you probably know, the Prime Minister here in Japan has launched this initiative called the New Form of Capitalism, which most people say, hey, what's that? But it has a really very important point. What it is, you mentioned externalities earlier. And for me, what the New Form of Capitalism is saying is that, well, we left behind externalities like the environment, like the social disparity. But why don't we incorporate that back into capitalism? And so it's the inclusive form of capitalism is my definition. And how do you do that? Well, through impact. and so the government is on board with this concept of impact. And the regional cities and regions and prefectures and those areas, it's a way. Impact is a way to reinvigorate the social infrastructure of the regions, and of course for startups, which is this huge conference. To me, I think the startup it's the innovation. The technology part, I think, has impact, but I think in the end, I see technology as more as an enabler. And in the end, it's who's bringing the impact. It's like Ronnie, it's like me, like yourself, like everybody in this audience. I think it's the people. So we have to be thinking about people-centric in terms of impact. And this week, lots of people came. I was really happy. Well, I had to ask Ronald Cohen, Sir Ronald Cohen, twice to appear with me on the panel, and I thought he must be way too busy. But with your kindness, Ronnie, I mean, you're the second time on the panel with you this week. We had a lot of other big names globally, thought leaders in impact coming to Japan. Which is basically, I think the message I got was, hey, something must be happening in Japan. Let's figure out what's happening. And so I think it's been a very, very interesting week, very, very busy week for me, but very, fulfilling.
I believe you are busy. Thank you very much. So you've seen, maybe new capitalism and then new policy supporting that, and then FSAs is onboarded to be part of dialogue between private sector, which should drive actual transaction, but also it should be in that same car, and then both wheel is rolling in coordinated way. Then let's probably delve into the juncture between a startup and then impact investing. We often, actually in UNDP's Impact Venture Accelerator as well, we hear startup is really stretched in terms of sometimes very early stage, seed, it's just one or two members running, and then really sweating to come out with feasibility of products they are testing and developing. And then why do we have to implement, apply the IMM? Isn't it really too much in terms of resources, time and cost, etc. UNDP has our own approach that this is as early as possible. You input in your DNA and then system, the regulation reporting framework will be just be more in detailed, and then of course if you are able to quantify, you get more interest from better profiled investor, etc. But we have two industry experts, so maybe Ken-san, how do you see is it too much to install this IMM in early stage of startup, or should it be like universal bottom line to participate into the market?
Sure. I am a startup in the financial industry, and just starting up with something, so many rules and so many processes. Yeah, it can be overwhelming, but when you start thinking about IMM and the modeling and all the data you have to collect, it becomes overwhelming. But in the end, I think as an entrepreneur, it asks you the right questions. Yep. Why are you starting up a new company? Yeah, you want to make money, but I feel the current startup environment, and let's say 20, 30 years ago in the dot-com bubble back then, it was all about putting something out on the internet, and IPO, and you're happy, kind of. And that kind of burst, right? And then this current wave of startups, I really feel the younger generations that are starting up in their 20s and 30s really want to, in a sense, they're even more ambitious than the, quote, traditional startups that we saw a couple of decades ago, because, they want to change the world, right? Which is a very ambitious goal, but they're pretty serious about it, but in a very, what's the right word for it? In a kind of natural way, in a sense. And so in that respect, I wouldn't get caught up too much on the IMM and sort of the logic. And yeah, you need a logic model, think about what you're trying to achieve, but you're starting up, so you start up with what you can do, not losing sight of why you launch your company.
Right. It's also my personal conviction. Almost all startups do start its journey because they want to address social challenges. They want to enhance connectivity. If they are in a rural area and then mobility, there is no public transportation, and then they would come up with like a rental bike, for instance, and then aging, and then how to lessen the financial boundary, etc. So question goes to Ronald again. You are familiar with Israel context, and then Israel is always top ranked in terms of technology plus startup. what is the ingredient of this relatively highly rated, and then do they are they keen to integrate impact investment, investment principle, and then probably you would highlight your contribution to the development of impact weighted accounting.
So what I see happening here in Israel, what I see happening in Japan, which I have to say it, even though we're both partners in the DSG. The progress in Japan is in very good measure due to the efforts of Ken and his ability to explain to governments, to business, to investors what this impact revolution is really about. So thank you for that, Ken. Japan is today a leader in the impact space thanks to these efforts. It's the only other country apart from the UK to have liberated unclaimed assets from banks, and it's done so at a bigger scale than the UK, billions of dollars, to go into improving people's lives. It's the G7 mentioned impact investment. There's a Prime Minister's committee on the new capitalism. So what is happening in Japan is going to change the face of business and of startups. In the same way that what went on in Israel in the last decade turned it into, or 2 or 3 decades, turned it into a startup nation. Now, what is that change? That change is that if you want to have a successful venture, you have to attract the best talent, you have to attract the best investors, and you have to achieve the biggest value for your company. If you just try to optimize risk and return today, you will not attract the best talent, because as Ken and you have been saying, but Ken was emphasizing it, people want meaning in their lives. Young people, young entrepreneurs, startups want meaning in their lives. They want to go beyond making money to improving the world. And so they begin to bring impact into their business models, and it attracts the best talent in the country, because when you aspire for something bigger than yourself, you attract the very best people. But the second thing is consumers want that. Consumers don't want to buy the products of companies doing harm. So you have an advantage in terms of growth and even of profitability. And finally, when you come to be valued on your IPO on the stock exchange, people are going to look at the demand for your shares, but they're also going to look at what negative impacts do you have to correct, and what type of investment are you going to have to make to reduce your carbon emissions, to improve your employment practices, to improve your supply chain, right? So it's just today, in a similar way to the arrival of the microchip, a time when entrepreneurs have the opportunity to adopt better business models. 40 years ago, when I started out, these business models had to do with incorporating technology. Today, they have to do with incorporating technology and impact. It's simply a better way to create, to grow, and to exit a startup.
Yes, I think industry is getting more intelligent, and as you say, is more transparent, and then more impact mind embedded into the decision-making, governance, and then a refined business model that is already very competitive in the market. So probably let's focus on social innovation and then impact investing. Ken-san, I know you're leading Triple I Impact Investing initiative for global health. After pandemic period, I think a lot of attention and public, interest turned into public health, and also, very expedited developments from pharmaceutical industry. And then you have been focusing in Africa, but this public-private partnership supported by Japanese government, but also congregating specialists of health as well as impact investment practitioners. So in this initiative, what would you like to achieve? And then what would be the opportunity through this public-private partnership? Are there many things the kind of format can do, or are they still kind of lacking any inputs?
Sure. This concept of global health has been a national strategy for Japan for over the last quarter of a century. And I've been involved in it around the same time, about 15 years ago, or so a little bit over 15 years ago, when I first learned about the concept of impact. Now, these are different tracks back then, but as you mentioned, currently it's merging into one track. Now, when people think about health, public health, usually people talk about the cost that it's gonna, yeah, it's a cost. It's definitely a cost, right? But if it's a cost, it sells to somebody else, right? And so, in a way, it's a growth strategy for somebody somewhere. And if you improve the health of your population, that's the foundation for prosperity. That's a lot of impact that you can build on top of that, right? In addition, I'm really concerned, like in movement in ESG right now, like in the United States, it's illegal in some states. Why is that? To me, because G was very easy to put a number on it. Number of, what's your ROE, number of independent directors, women on the board. So that came first, and it needed to come first. E came next because it was global and it affected all of us. It was scientifically based. And guess what? You could put a number on it, CO2 equivalent. When you go to the S part, what's the number? It depends. Is there a scientific-based number for S? If you're in Japan, Israel, Africa, United States, different culture, different regions, you have different standards for what social is. So there wasn't this sort of global sort of a language. But in the fact that ESG is illegal in some states is because I think the S got left behind. and that causes social unrest, and social unrest feeds politics, and politics is doing what it's doing right now. So the question I think we need to think about is, what is that metric, what is that number we can think about in S? And one of the ways I was thinking about it, I was having a conversation with my friend Miyoko Kashikawakura, who is the head of the Gates Foundation here in Japan. And we're thinking, yeah, but health, there is that scientific-based number because it's health. And health, whether you're in Japan, Israel, Africa, or United States, or wherever, as I mentioned, it forms the foundation of any thriving society. So thinking about the impact through the S part, that might provide a global language, a common language. Easily said than done, because there's lots of different ways you can, measure wellness and all this kind of stuff, and you can measure the output of the activity, but the outcome and the impact, it's not maybe just health, but it might have other factors like education or environment and all this other stuff. So it's very complicated, but I think when you think about impact, it's basically it's a frontier. Right? I mean, we don't have a textbook or a guideline or a manual that tells us, hey, this is how you have impact. A lot of smart people, a lot of all around the world is trying to figure out, how do you measure that impact? And unless you measure that impact, you can't show your intent. In Japan, there's a saying called Sampo Yoshi, the three good. Good for the seller, good for the buyer, good for society. This is a wonderful phrase. But the problem with Sampo Yoshi, I think, is you can measure the good by the seller because you can see how much money you made. Can you measure the good of the buyer? Maybe, satisfaction. How do you measure the good of society? Don't know. And so, in a sense, the reason why Sampo Yoshi, which is a great, wonderful Japanese way of thinking about doing business, the reason why it's not a global standard in a sense is because you can't measure it. If you can measure the three good, then I think everybody said, that's good, you know. So this concept of measurement, I think, is really, really important. But do we have the right answers? What do you think, Ronnie? Is there one number we can find?
I don't think there is one number yet, Ken, as you and I both know from our work at the International Foundation for Valuing Impact. But what we can say is that there are several numbers that everybody running a business, investing in a business, or a government looking to provide incentives should be focusing on. One is differences of salary relative to a minimum wage, relative to your competitors, and so on, within your company, within your supply chain. Another is the issue of gender diversity. Technology enables us today to compare the number of people of different genders around the facility with the number of people inside the facility, and to ascribe to the people who are deprived of work the salaries they would have earned, and use that sum as an indication of the economic cost of lack of diversity. Now, if you do that for Amazon, you realize that Amazon has a $6.5 billion a year diversity debit, right? You do it for Apple. Apple has a $2.5 billion a year diversity debit. As a percentage of salaries, Amazon is better performer, 16% versus 25%. So we can measure differences in salary, we can measure differences in employment, we can also measure advancement in a company. Do people of different backgrounds advance at the same rate as as others if they have equal qualifications? So we don't have a single number, as you were saying, but as with climate, we are getting to the basic tools to measure independently the different factors that form social impact. And eventually we will get to some type of equivalence, as we have done with CO2.
Right. That leads to actually...
Can I just add? Ronnie, I just want to report to you, I just saw this, a friend flashed me this news that KDDI, which is one of the second largest communication company here in Japan, has just released today that they're using the IFVI framework for social impact. This was guided by Mr. Ryo Yanagi, who was the former CFO of Eisai, currently a professor at Waseda, and also supported by Beam Consulting. But their finding was basically that for EBITDA earnings, that through their social impact, their technology in ITC, saving people's lives from, for instance, traffic accidents and things like that, they found that it was like increased your earnings under the IFVI model 1.6 times. And I'm sure there are some people that says, you can poke at the numbers and but still, I think there are companies here that are at least trying to come up with that sort of number to figure out what their impact of value creation is. Financial, also, the social and environment.
Absolutely.
And it's so crucial to the stability of all our societies, isn't it, Ken? What we're doing through this transparency on social is to reduce social gaps. The problems we face around the world today is that capitalism hasn't distributed the fruits of prosperity as widely as it should have done. And it created a sense in half the population or more that democracy and capitalism don't work for it. And so they're prepared to go to authoritarian governments that are going to bring them a solution, which they don't. But at least the temptation to do so is there. So if we want to maintain stable societies, we have to reduce economic gaps and the social gaps that come with them. And in fact, transparency is a tool in achieving that, a very important tool in achieving that, because it also gives government the ability to provide incentives and disincentives through tax credits and through taxation for companies that are doing the right thing on the social front.
Well, that has been very interesting discussion on the juncture of quantifying exercise to prove diversity makes corporate business strong. I just recalled yesterday in this stage the CEO of Santry, Ninami-san, he mentioned to push strong innovation, diversity is a key. I think probably Ronald, you mentioned transparency. I think without transparency, like homogenic community tends to be in the same kind of profile. However, if you invite, different ethnic group, different, nationality or gender or physical mobility, then, naturally, I think, one needs to be more accountable, and then that gives transparency, and then it's probably inviting, more innovative thinking to look at the market in a fresh lens. So almost the end of the panel, which is becoming just more interesting and interesting. But last question to two industry giants about future. So a lot of, impact indicators. I mean, the UN has 17 sustainable development goals, which is one of the largest adopted sustainability, impact indicator. But we are now in the year 2030, and then looking back to today, 2024, how do you see this year, we have discussed, Ken-san and I, it's a kind of tipping point, also Ronald, tipping point in Japan in terms of multiple scramble of development of innovation supported by government, and impact investment guideline is issued. But what will be your thoughts? Ken-san, would you like to start?
Well, I think Japan is in a new era. And looking ahead, let's say in 10 years, what's going to be happening here in Japan? Well, the population is going to be declining. What's going to be happening to the population in the world? It's going to be expanding. So what does that tell us? Back in when I was in my 20s, we had this model called Made in Japan, which was a very, very powerful model. We made it in Japan, planted it in Japan, and we sold it to the industrialized nations. We were so successful, the United States got so mad, there was bashing. And so the next 30 years after 1990, we called the Heisei period here in Japan. What did we do? It was made by Japan in your country. I'm so sorry. Then guess what happened those 30 years? It was Japan bashing, and after 30 years, it was Japan passing, right? Currently, we're in this new era called the Reiwa era, which started in 2020. And that happens to be the tipping point where the population really starts to go, reverse pyramid. And so to me, in that environment, we in Japan need to go for another model, which is not just made in Japan, made by Japan, but made with Japan to improve the lives of many, many people around the world, especially in the global south, through impact. And I think there's so many opportunities in this big hall with so many, startups, technology, but even large companies, even the SMEs in the regionals. There's a part that we can play. So I think we're in a very, very exciting time here in Japan.
Wonderful, very positive note. And Ronald, would you like to join your views about 2024 against 2030?
I would. I would like to make a contrast, a parallel with what happened 100 years ago. In 1929, after the Great Wall Street crash, investors sat up and realized that they had been investing in companies without understanding what profits they made, because every company could pick its own accounting policies and there were no auditors to verify the numbers. And people at the time when the United States wanted to introduce GAAP accounting, 1933 and 34, people said it would be impossible to have a single accounting system for every company, irrespective of size or sector. Now, we know, looking back 100 years, that without GAAP accounting, without auditors, without regulators, we would never have got to the $200 to $300 trillion financial markets we have today, because you have to provide certainty to investors that they're not going to be ripped off. We're in the same position today, 100 years later, with regard to impact. $40 trillion are going into investment called ESG to achieve impact without anybody having any idea of what impact is being achieved. And so the notion that we can't create an impact accounting system is like GAAP. It's possible. We're doing it at the IFVI. You will see a major step forward this year on the environmental front, giving you monetized transparency on every environmental impact that you can apply to every company. And so we are moving into an impact accounting system now, GAPE, as I like to call it, Generally Accepted Impact Principles. And this is what is going to transform our economies from being risk-return economies to risk-return impact economies that bring challenges or solutions to challenges. I call them impact economies because you're optimizing risk, return, and impact. And the aim of the economy begins to become a social and an environmental one, as well as an economic one. I think this next year will see us progress very significantly in the direction of this GAPE accounting, which is going to enable us to judge businesses, new and old, according to their profit performance as well as their impact performance.
Wonderful. Maybe 10 years back, looking back 10 years ago, just a little bit of, population does do maybe social, responsible investment and then CSR. But we are now, equipped with, intellectual tools of investment-weighted accounting, and then, Ronald, you mentioned generally accepted impact accounting. So the industry is revising the principle. And again, the DNA of startup is naturally, compatible with impact thinking. So some of, maybe challenges, macro fundamental may not be, ideal around this time, but thank God, the ecosystem in Japan, as well as this, financial accounting tool, as well as converging ISSB, which gives clarity to all of, business enterprises. So we are very positive that all the enterprises, are pushing a triple bottom line, and this is going to be the norm and then bottom line. So we welcome, all of our audience here to join this journey, and then hope that next year we, exchange a little more achievements here. And thank you very much, and put your hands to the two great panelists today. Thank you very much.
All right, thank you very much. 皆様、改めて大きな拍手お願いします。Thank you very much.